Hi everyone, Chad Shoop here, and welcome to my latest segment of Quick Takes. Today we're taking a look at 5 stocks, and we're going to run through them in just 5 minutes once we get started. So it won't take long. We're just going to let you know whether or not I want to bank on these stocks going higher over the next few months, or they're stocks that are going to tank and head lower on my tank it list. So before we dive into that today though, I just want to remind you that every stock that we talk about, every stock that I cover in my bank it or tank it videos or these quick takes are stocks that you all recommended. So big shout out today to Shweta, James, Donald, Susan, and Keita for the stocks that we are going to cover. And if you haven't yet, just leave me a comment either on this YouTube video or on Twitter at ChadShoopGuru, and let me know what stocks are in your portfolio, what stocks you want me to take a look at, just to give you some quick analysis on. This is not by any means the overall idea on whether or not you should buy or hold this stock. There's plenty of reasons to buy multiple stocks in the market. These are just some quick looks on what I expect to see from these companies over the next few months. So it could be totally off on your long-term view, or it could align with what you're looking at, maybe a chance to get in or an opportunity to sell something in your portfolio. So just let me know what stocks you want me to take a look at, and I'll be sure to feature them in an upcoming Bank It or Tank It or Quick Takes video. Now, for today, we're going to dive into these 5 stocks, but first I just want to explain that I added a new layer to our charts. When I pull them up, it's got the prices on it are actually in colors. So we have different colors, and it's based on the relative rotation graph concept. But instead of showing you the relative rotation graph, which is, it's hard to kind of understand that, just understand this, that the relative strength basically looks at the stock that we're covering today versus the S&P 500. So if we're outperforming the S&P 500, then the price chart will be in green, and it's in the leading section of this graph. Or if it's in red, then that means it's trailing behind the S&P 500 or lagging the market. And what this relative rotation graph does that's really cool is to add an element of momentum to how these two things are performing, how the stock is performing relative to the S&P 500. And that momentum indicator lets us know if the stock's maybe in the leading area, it's outperforming the market, but then it starts to weaken. So then it turns yellow, and then we know that the stock's starting to weaken in that area, and then it eventually ends up lagging the overall market, and then it starts to improve, and that's a blue shade on the charts that we're going to look at today. And I'll remind you of this as we go through it, but just keep in mind that this is just another layer that we wanted to feature and that we'll use just to dictate what we expect to see play out over the stock in the next few months. Let's start with our first company, and this is ticker symbol IPHI. It's Inphi Corp, and when we're looking at on the chart here is, you can see the colors. It should be very colorful. I don't know if you can pick that up, but the prices here, instead of being black candlestick charts, it's in colors just to give us an idea of where they are on that chart. Red was lagging, so down here it was lagging the market. Then blue started to improve. Green now was leading the market, and then we had that big breakout that we just had last week. So this red resistance line was key because it was the previous support here when stock was trending higher. Broke below that, and then that acted as resistance, but then we just broke back above it again. The stock, it's in a semiconductor sector, which is a very explosive growth industry, and it's a lot harder to pick out the losers in this sector than it is to pick out stocks that are going to head higher. And this stock, based on a price chart, based on what we're looking at, is a stock heading higher. So this stock's going to be on my bank it list. So our next company, we're going to switch industries, and we're going to dive into Crown Castle, which is a real estate investment trust. And basically these stocks are typically known for their yield. They go into the REIT just for dividend purposes to try to pass that on to the shareholders in the form of a dividend. But you can see this one, it's had a nice growth in the stock price here over the last several years, and it's definitely trending higher. We have an uptrend just like we saw on our last chart, and with the 200-day moving average climbing up, we see that this stock's showing nice momentum to the upside. Then we had this counter trend move where it's trading against the overall trend in the market, and then it just broke out of that. So that was great to see, and you can see that it was leading during this move higher, and then now we're already starting to weaken. That's the yellow candlestick right there on the end of this chart. And again, it doesn't mean that we have to see a big pullback, but just compared to the overall market, it's great to see this because we had a big push higher, and then it's just got to take a breather. We see some of this weakening, and then maybe lagging. Maybe it hits back down to about 160, 161 before it finds support, and then starts to trend higher from there. But overall, this is stock on my bank it list. I like that it was in the leading quadrant when it had the breakout. Our next stock is ticker VVNT, and that's Vivint Smart Home. And this one, now we're in the leading quadrant again. You can see here that it was in this nice upwards price channel. And when you take a look at this, though, the thing to keep in mind is that it hasn't broke out yet. So until it does, you can expect this stock to maybe trend back down to about $17 a share, which is a pretty significant move from where it's at. It's over a 15% drop from where shares are currently trading. So it may not be the perfect timing to jump into this because we know that the stock's probably going to go to the weakening and then maybe lagging quadrant before it improves and then gets back into the leading. And if it would have broke out of this little pattern that it was trading in, it would have been a little more bullish. But this is still a stock that I want to bank on. Being in the smart home industry, just keep in mind you may get a little bit of a pullback here. But it is a bank it stock, and I do like the shares to climb higher from here. Just look and see if we can break above this little price channel before it starts to run away for us. Now our next stock is a natural gas company that focuses on gathering, processing, and transporting and storing natural gas. And it's Oneok, ticker OKE if I'm not saying it right. And this is an interesting chart, and I actually just did an article on oil and gas stocks and oil and gas prices because they crashed back here along with the other stocks back in March during the pandemic, and then we had a nice rebound out of that, and we saw it pretty much across the board. Oil prices rose, energy stocks rose, and stocks like OKE rose as well. But then from there, energy stocks continued to pull back from there. Oil prices stayed elevated, but now I have an article below this video if you want to read more about it. But basically, oil prices are entering their weak seasonal trend here at the last 2 months of the year. So I expect oil prices to head lower over these last 2 months, and that's going to mean that stocks like OKE and these other oil and gas companies are probably going to see some negative sentiment for their shares as well. So I don't think now is the perfect time to add to these companies. You can see this one's been a little bit more beaten down. We were just in the weakening quadrant, then it started to improve and then lead all of a sudden. But I think we're going to see this roll over again into the weakening and lagging quadrants and even test back down to $24 a share or less. So this is a stock that's going to be on my tank it list. Now our next stock up is Viemed. This is a healthcare company, Viemed Healthcare, which provides home medical equipment and solutions to patients all over the US. And this gives us a different look at the relative rotation graph concept here, because instead of it being the leading quadrant like our first two stocks were, this one was lagging the market, now starting to improve. So this is a great sign, because typically when you look at this, the best time to buy is deep in the lagging. If you're looking for the most return, the biggest return. Once the stock's leading, you can look back here and you just see once it gets into that leading quadrant, that's when it can really run away. Weakening, leading, weakening, and it would have been great to buy at any point during that rally. But once we get deep into the lagging quadrant, like we just did, then it usually presents an opportunity that in the next few months, this is a stock that's going to be heading higher. And right now, I just formed this little descending triangle pattern with the red resistance and the green support. But I think we're about to break out of that, and if we do, it's definitely going to be in the leading quadrant once we get the rally, and it could be headed back up to $10, $11 a share. So this is a stock that's going to be on my bank it list. The healthcare industry is enormous, and it's got a ton of strong tailwinds behind it that's going to continue to push these stocks higher. So this is an industry that I love. That's all for my video today. Again, just 5 stocks in 5 minutes. Be sure to leave me a comment below and let me know what you think about these stocks and any other stocks that you want me to cover. So until next time, I'm Chad Shoup.